Now guys, I'm going to discuss the agenda of this S&P 500 weekly technical analysis, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. One of the reason why we are expecting a complex, this the movement in the coming week, or the tricky movement is the weekly chart also. So I will discuss the weekly chart here and I will tell you what we are expecting in the coming week. The second point of the agenda is the economic data, which is the GDP. Recently, the GDP for GDP data for quarter 3 it was published, and this the quarter 3 data. It was much better than expected. Okay, that was the reason we have seen fall and fall. Okay, and more bearish movement that is expected to come. And the upcoming FOMC meeting that will be scheduled. So that is scheduled for November 1st. Okay, Wednesday. So I'm going to discuss these outcomes of this FOMC meeting. So there will be only two outcomes of this the FOMC meetings. Okay, and in these the two outcomes, what kind of movement we can anticipate in the entire US stock market. The third point of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart, you are seeing that it is bearish. However, the S&P 500 it has hit the saturation on last Friday. This means that now anytime any movement we can see a reversal. Now this reversal will be conditional, means that to what levels we can see this the reversal. Okay, so it will depend that whether the S&P 500 is going to give another red candle on Monday or a green candle. I will discuss this thing on the daily chart and I will tell you what the technicals are saying on the daily chart. Then comes the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And this last point of the agenda is the probable movement of the S&P 500 from October 30th, which is Monday, to November 3rd, that will be Friday. So just like this the last week, okay, that there will be a gap down open and then this fall, then reversal, and other than that 4155, okay, support, and towards 4035, etc. So these are the scenarios, everything. So I'm going to discuss that in the fourth point of the agenda. And guys, I strongly advise you to watch all of these sections because these sections are interrelated, right? And guys, I would like to add a disclaimer to this S&P 500 weekly technical analysis, that this S&P 500 technical analysis is not a financial advice of any kind, in any form or in any manner. And this S&P 500 technical analysis is not about any kind of trade setup, which is why whatever profits and losses you are going to see are all yours. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you're looking for these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the first point of the agenda, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. This is the weekly chart, W as in weekly chart. So weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, so let's first interpret the candle itself. A heavy bearish candle, no defined shape, okay, simply indicating the bearish sentiments. Now the question is that does these bearish sentiments indicate a gap down open or this the bearish movement immediately upon open on Monday? Yes, it does. However, this is not 100% confirmed. Why this is not 100% confirmed? The reason is the saturation on the daily chart. S&P 500 is saturated on the daily chart. That is the only reason why this is not 100% confirmed. Without the saturation, yes, okay, this was there 100%. Okay, but as you know that historically, or if you have subscribed to my YouTube channel for last many months or years, then you know that whenever there comes a saturation, through the stochastic RSI in the S&P 500 or the Dow Jones, in that case, whatever is the trend, that trend might not continue, rather we might see a reversal. Okay, that is why I'm saying that it is not 100% confirmed that there will be a gap down open, or irrespective of any open, a bearish movement on Monday. Yes, there are chances, very fair chances, very good chances. Okay, but still because of the saturation I cannot confirm this 100%. Now let's see what the technical indicators are saying on this the weekly chart. So one thing that is going to happen here, okay, and if it happens, okay, the thing is the crossover in the moving averages. Okay, So this the fall, okay, it was not heavy. So means heavy in terms of that if the fall would have been like up to 4035 in the previous week itself, then definitely the crossover was there, okay, or the crossover would have been there. But now because the fall was not heavy, the moving averages have still not given the crossover, the bearish crossover. So what will happen when the moving averages will give a bearish crossover? Then it will enter into the long term bearish trend. However, it is still in the long term bearish trend, but through the Dow Jones, not in the S&P 500, but in the Dow Jones, right? Last week I have shown you the weekly chart of the Dow Jones. So it was there, and the long term bearish trend is there. Okay, so once it happens in the S&P 500, then it will like more concrete, like 200% confirmed, okay, that this is the thing. And in that case, okay, bearish trend, bearish movement, because as of now it is coming down, fine, it is coming down, but then it will take a reversal, okay, some good reversal, and then finally it will fall, okay. And this the lag, so this is the first lag, the second lag, the reversal lag, the third lag. So this the beginning of the third leg, okay, this is when we can say, okay, that the US stock market is entering into the correction or the recession, okay. However, there are still, some more things that need to be seen or need to be confirmed before we can officially say that yes, the recession has begun, okay. But still remember, recession is the best time to make a lot of money, tons of money, okay. So stay tuned, okay. Now, other than that, when we look into some other, these are technical indicators. Clearly, no stochastic RSI, okay, it is not saturated on the weekly chart. So that is a good thing for the bearish, because it further supports the fall. Means more fall, okay, can come without, okay, any problem, because on the weekly chart it is not saturated. MACD and stochastic RSI, they are aligned bearish. Closing of the candles is below the moving averages, confirmed bearish movement, okay. Other than that, all of the technical indicators are supporting the bearish movement, and just one technical indicator. So now we are going to say that the S&P 500 on the weekly chart is 80% bearish, okay. Last week it was 75%, this time 80%. Once there comes a crossover, okay, then I will mark it like 95% bearish, almost 90 to 95% bearish. So let's see how the S&P 500 is going to trade in the next week. Okay, if there comes a bullish candle on Monday, Tuesday, or any of the days, then fine, because in that case more fall will be seen. Okay, next week will be complex, tricky. Okay, so just be careful, trade carefully, and but if you are my Patreon community member, then you need not to worry about, okay, these things. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and the second point of the agenda is the FOMC, GDP, and the recently published PCE and the core PCE data. Okay, so let's first discuss the GDP and the PCE and the core PCE data, and then the outcome of the FOMC and the movement of the stock market. So in my pre-market update on October 26th to my Patreon community members, and for those who are not aware of this, the pre-market update is given 1 hour before the open of the stock market, and this describes everything what is going to happen in the stock market today, okay, everything. Now GDP data. So the GDP data, okay, it was published for quarter 3, and it has confirmed that the GDP for the quarter 3, okay, estimates were that it has grown at 4.9%, okay, and the previous quarter GDP was, the growth rate was 2.1%. so if you compare 2.1%, 4.9%, very heavy, very heavy. Other than that, the Wall Street was expecting a maximum of 4.3% growth. Even the Wall Street was expecting twice, okay, growth, but the actual, okay, it was 4.9%. so this was very negative news for the stock market. And on 26th itself, if you notice that this was 26th, okay, previous day the S&P 500 closed at 4186, okay, on Wednesday it closed at 4186, but here on 26th, okay, so I have seen some reversal, okay, when this data was published, and all of a sudden the futures were reversed, okay. So I mentioned this thing that if the market movers doesn't reverse the trend with some stupid reason, generally they do, then today, means on 26th, the S&P 500 will hit 4155, right? And you can see that on Thursday it hit 4155. Other than that, it came down to 4127. And you will be very surprised that to my Patreon community members, I've cleared this thing that on this particular day, on Thursday, the maximum the S&P 500 can come down will be 4127 only, and you can see an exact hit to 4127. Okay, and this was mentioned to my Patreon community members very well in advance, even before the open of the stock market. So it hit, by the end of the day, it hit exactly 4127, right? So this is with my moving averages, technicals, calculated levels, that generally, okay, we are going to get the exact number where the S&P 500 is going to hit, okay, bearish side or the bullish side, and it hit dot exactly that number. Okay, so this is the GDP number. So now the GDP, okay, it has confirmed that the economy is very well holding, okay, pretty well it is holding, very strong. Economy is growing because why? Because the people have money and they are spending the money. Okay, so these are the factors. So after an initial, okay, a little reversal, and one more thing on Thursday itself, okay, a reversal, that any reversal will be limited to 4185. That's it. Okay, so Thursday we knew the upper boundary 4185, lower boundary, lower level 4127. Okay, both of these levels, the S&P 500 hit both of these levels. Okay, the upper one 4184, just 1 point less, but this is the 4127, it was an exact hit. Okay, so the strong GDP data is confirmed that the Feds, they are going to take some harsh decisions, and it is not good for the entire US stock market, right? Now the PC data and the core PC data. So now in my pre-market update on October 27th to my Patreon community members, the PC and the core PC data. Okay, so this okay, PC personal spending has increased. Okay, this was the primary reason. Okay, that why the market, okay, it has sensed the negative, because the personal spending has increased by 0.7%, whereas the Wall Street was expecting only 0.5%. So when this personal spending, okay, when it is clubbed with the GDP, strong GDP, this means that yes, personal spending, people are spending more money. Okay, this is keeping the GDP strong. Other than that, okay, many of the things, but overall the picture was that the PC and the core PC data will go neutral. Okay, it will be seen neutral, neither positive nor negative. Whenever the whenever the economic data it goes neutral, in that case what happens is that the stock market or the index, okay, in that the neutral case, it generally align itself to the trend. Okay, neutral means that it will align itself to the trend. If it is bearish, then it will align to the bearish trend. If it is bullish, then it will align to the bullish trend. So Amazon, okay, Amazon tried to give some relief to the S&P 500. Okay, however, the other factors, the other stocks, they were okay, they came down heavily. Okay, and they have simply cancelled the positive impacts of the Amazon. So guys, now that we have discussed the PC, core PC data, GDP data, okay, now let's discuss the upcoming FOMC and the outcome of the FOMC and the possible movement or the probable movement of the stock market through the FOMC. So far, almost 97% chances, okay, that so the Wall Street is saying that there are 97% chances that the Feds, they are going for another pause. Okay, no rate hike, no rate cuts. As of now, no one is talking about the rate cuts. Okay, so rate cuts will be there after 6 months, 9 months or so. Okay, next year 2024 in quarter 3 or quarter 4, there might come rate cuts. Okay, but there is still no confirmation. Okay, so Feds are going to keep the interest rates longer, okay, as is. This means that all of the loans and all of these things will remain costlier or will become more costlier. Okay, all kind of loans, credit, okay, whatever it is. So now the stock market is the bearish movement. Okay, after the GDP data and other data was published, it is already bearish. This means that if the Feds, if they go for a pause, in that case the stock market may not fall. Okay, or if the stock market comes down, then at most to 4035. Okay, 4035, as you know that this is my calculated support and resistance level. In this case it is support level. The zone around 4035 will hold the S&P 500 very well. Okay, and then it will throw it back. Okay, in this the bullish side. Now the only condition, there might come a very heavy fall or extremely heavy fall. That will be if the Feds, if they decide to raise the interest rates. As of now, the stock market is pricing in the pause, that the Feds will pause, the Feds will go for another pause. Okay, so that is why we are seeing this a limited fall, very limited fall. Okay, another rate hike means the fall will accelerate, because the stock market has not yet taken this thing into account, has not yet priced in. Okay, these are the two outcomes, and this is how the stock market is going to work. Anyways, whatever happens, no matter what happens, the stock market will eventually realign itself to its trend, whatever will be the technical trend. Okay, and then it will simply follow its technical movement. Okay, and everything technically. So if you have not yet subscribed to my YouTube channel, then you can subscribe to my YouTube channel. And if you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. And guys, for those who want to learn the technicals, the technical analysis, everything, the movement, hacks, strategies, analysis, manipulation, technicals, predictions, okay, support and resistance levels, much more, means you simply want to learn what is going to happen, what has happened, and what will happen, okay, even before the things happen, then you can join or you can participate in my stock market knowledge transfer program. Okay, and so this is the spreadsheet, okay, where okay, everything is mentioned in very detail, what will be there, what will not be there, etc. Okay, and these are the three levels. Okay, and each level what is going to cover, for example, options and options trading. So whatever I'm going to cover in the options and options trading, it is there in the spreadsheet. Okay, and this is my email address. So whenever you want to join, whenever you want to learn, whenever you want to participate in this program, then you can simply drop me an email. Okay, this is my email address, and also the link to this program is given in the description of the video and also in the comment section. Now guys, I'm going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And the third point of the agenda is the S&P 500 technical analysis on the daily chart. This is the daily chart. D as in daily chart. Okay. So daily chart means that the one candle represents one day, not 1 hour or 1 week. One candle means one day. So let's first analyze the candle itself. If you look into the candle, it's a heavy bearish candle, okay, indicating the bearish sentiments. Other than that, there is no defined shape of the candle. Okay, that so we are going to consider the bearish sentiments only. Other than that, the candle, okay, it is not formed in a manner where we can say that there will be a gap down open, or irrespective of any open, there will be an initial bearish movement. Okay, secondly, it has closed above one of my very good, okay, very strong the support levels. That is why, okay, again I cannot confirm whether there will be a gap down open, or irrespective of any open, there will be a bearish movement, right? So this is clear through the candle. Now let's see what the technical indicators are saying. When you look into these, the technical indicators, all of these, the moving averages closing below the moving averages and all, and the MACD and the stochastic RSI, okay, all of these, you are going to notice that the S&P 500 on the daily chart is absolutely bearish, 100% true bearish on the daily chart. Okay, then what's the problem? The problem is the saturation through the stochastic RSI and one more technical indicator that is there. These two technicals, okay, are giving this the saturation to the S&P 500. What does the saturation mean? Saturation means that as of now, S&P 500, it has the technical reasons to give a bullish reversal. Okay, that is the meaning of saturation. Whenever the saturation happens, let's say in the bullish side, then it will fall. Okay, here it will move up, right? That is the technical meaning of the saturation. So guys, for now, as we know that 4155 is there, 4155 should be respected, and it will be respected. Okay, so any reversal from here, okay, it will be back to 4155. Then the 4155 will decide, okay, whether there are any chances that the S&P 500 can move up further, or it will remain below. Okay, so it's not just 4155, but the zone of 4155. And again, support and resistance levels, okay, these are not the individual levels, these are the zones, support zone and resistance zone. Okay, I mentioned this thing again and again in almost all of my technical analysis. Okay, So technically 100% bearish. Saturation is going, it is going to give, okay, this is the bullish reversal. Yes, one more thing, this the bullish reversal here, okay, it is not confirmed that it will be seen on Monday. There is no confirmation that the bullish reversal will be seen on Monday. Why the confirmation is not there? The confirmation is not there because only the K channel is 0, the D channel is not 0. Okay, so the 100% confirmation comes only when K and D both are 0, and that will be an exceptional case. Then why we are talking about the reversal? We are talking about the reversal because as soon as K becomes 0 or K becomes 100, okay, there, so from that moment onwards, from that day onwards, anytime there may come a reversal. Okay, there is no defined okay, this thing that the K is 0 and the D must be equal to 0 and then only there will be a reversal. No, it has hit the, so K is 0 means yes, now it is ready for the reversal. Okay, Monday onwards, maybe Tuesday, okay, there may come a reversal. I will discuss this more in the next point of the agenda, that is the probable movement, okay, in detail. However, as I mentioned earlier, next week will be extremely tricky, complex. Some heavy ups and downs will be seen, so be careful. But if you want to trade carefully, if you want to trade safely, if you want to know what is going to happen, what is happening, okay, on the daily basis, then you can join my Patreon community. Because by joining my Patreon community, you'll be very well aware of the things even before the things happen. And when you join my Patreon community, you will get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. So let me tell you that how you can join my Patreon community. In order to join my Patreon community, I've given the link in the description of the video and also in the comment section. So when you visit that link, then you will see that this is my Patreon page, this is my Patreon profile. And on my Patreon page, you will see that there are these two levels, two tiers, okay, daily S&P 500 updates. The only difference between these two tiers is the geographical location. Okay, this one is for non-US and Canada residents. This is for US and Canada residents only. So when you subscribe, when you join either of these, then you will get the daily S&P 500 updates, analysis, and the probable movement every day from Monday through Friday, as well as the stock market opportunities. And if you notice that many people have joined my Patreon community for last many days, weeks and months, okay, and more than a year, so they are getting the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And this the last point of the agenda is the probable movement of the S&P 500 and the entire US stock market in the coming week, that is from October 30th, which is Monday, to October 3rd, that will be Friday. So let's see what is going to happen in the US stock market next week from Monday through Friday. So first of all, okay, a few things you must understand and you must be very careful of. Okay, number one is November 1st, that is Wednesday. Okay, Wednesday, FOMC, the FOMC decision, as I mentioned in the second point of the agenda, that there will be two outcomes of the FOMC. 97%, okay, they are expecting that there will be no more rate hike, okay, means there will be another pause. This means that the stock market has already in some manner has priced in this pause, okay, that's why it is coming. So if there comes a pause, then there might not come, more fall, or may come a limited fall and then some reversal. Okay, it will be tricky, it will be known only through like what is there, okay, in the document, okay, and the press conference of the Federal Reserve Chairman. So if you are my Patreon community member, then remember, as always, okay, I will give you and I will tell you where exactly the stock market is heading to, up, down, or if the stock market has any chance to get a breather. Okay, so at 2 p.m. Eastern time on Wednesday, November 1st, okay, I will give you the update once this the FOMC, so once the decision is published, and I will let you know, okay, what we are expecting at 2:30, from 2:30 p.m. onwards until 3:30 p.m. I guess. Okay, there will be this the press conference. I will give you the continuous updates, just like okay, every month I give you, okay, and then you can make changes to your trades accordingly in the real time. Okay, so this will be very tricky in this the coming week. uh, this is the first part. Second part is the earnings of Apple, AAPL. Apple is going to post its earnings on Thursday, that is 2nd of November. Again, that will make the entire US stock market volatile because Apple is a $1 trillion company. Okay, and it is the primary this the component of the Nasdaq and the S&P 500. Okay, so very heavy movement we can expect through Apple. Other than that, some more data will be published on Thursday itself and on Wednesday also. Thursday, Wednesday, and Friday also. Yes, it will be there. Okay, and other than this, the data and everything, as of now, the S&P 500, okay, it has entered into the saturation. Okay, this means that it is now in this the complex stage because it is now ready for a reversal, a bullish reversal, right? And if you have not yet joined my Patreon community, then you can join my Patreon community to trade safely. Okay, now yes. So as of now, as you might be aware of, 4155 4155, and the other one here is 4035 4035. Okay, 4035 4155, and 200-day EMA, and then above that we have 4291. Okay, these are the key levels here, you can say. Okay, now as of now, any reversal is expected to be limited to 4155, the zone of 4155. Why? The reason is that 4155 historically has created a confluence zone. This confluence zone is providing the necessary support to the S&P 500. This means that in order to breach the confluence zone, okay, although the S&P 500 tried to breach the confluence zone on Friday, however it failed, okay, on the closing basis. Then so this means that S&P 500 is not allowed to breach and trade below the confluence zone until and unless the S&P 500 spends minimum 2 days, 2 or 3 days in the confluence zone. Okay, so confluence zone, you can simply think of the 4155, a zone around 4155. Okay, however the zone is extended. Okay, so a zone around 4155, that will be seen as the confluence zone. Okay, there is a 30 to 40 points from 4155. Okay, approximately. So this means that as of now, this was 26th of October, first, okay, day 1, 27th of October, day 2, 2 days. Okay, just one more day. So it all it needs to do is to spend one more day, okay, in this the confluence zone, and then its obligation is fulfilled. So now what is after the, okay, this the obligation is fulfilled? After the obligation is fulfilled, that then the S&P 500 is permitted, technically allowed to move towards 4035. Remember, the the entire fall, this the movement, this is to what? This is to 4035. Okay, this is the final destination. Okay, so when I say 4035, it will be the zone of 4035 plus minus 10 points, the zone of 4035. Okay, so that will be the final destination before it can give, some short-term bullish reversal. However, a short-term bullish reversal can also come from the zone of 4155. Okay, that's not a problem because as of now, S&P 500 is saturated on the daily chart, right? So now this means that now it would be very interesting to see where the closing will be on Monday, because the closing on Monday will define the future course of the S&P 500. Means the movement of the S&P 500 in the rest of the days of the next week and also in the subsequent week. Because if there comes a closing that is of red color, a closing that is of red color. Okay, let's say that there came some open, maybe gap up, gap down, open intraday, it has traded like that, and finally it has closed as red. Okay, but as long as it is spending a few hours in this the zone, then also okay, it will be considered as fulfilled with the obligation, because it is spent a lot of time in this the zone. Okay, that's fine. If there comes a red closing on Monday, okay, this means that another day of saturation. Now on this day we need to see what will be the value of D, whether the D will be 0 or not, because see, as of now I cannot comment whether it will be 0 or not. Okay, it will be known only when the S&P 500 comes into the session on Monday. Okay, and if you are my Patreon community member, then most likely in the first update I will inform you whether the D will be seen 0 or not. Okay, and what will be the the consequences. Okay, and then what will be the expected movement if it happens. Now uh, let's say if D goes 0 on Monday, okay, through a red closing, what does that mean? This means an immediate, a heavy bullish reversal, sharp bullish reversal, minimum 1%. Okay, that will be seen in the uh, not just in the S&P 500 but in the entire US stock market. Okay, because one more thing is there, that the Dow Jones has also reached almost to its support level. Okay, but it has some more room in the bearish side, the Dow Jones. Okay, so if there comes a red candle, okay, in case of the S&P 500 on Monday, and also a red candle in case of the Dow Jones on Monday. Okay, but again, only after open it will be confirmed whether the Dow Jones is going to give the saturation or not. So if there comes a scenario where the S&P 500 is saturated, Dow Jones is saturated, doesn't matter whether the D is 0 or not, doesn't matter, the entire US stock market will get this uplift. Okay, a heavy bullish reversal that might be seen as manipulated, but no, that will not be manipulated, that will be technical bullish reversal. Okay, so this is with the red candle. So again, it is subjective, that the red, whether it is giving D equal to 0 or not, and at the same time the red in the Dow Jones, whether it is giving K equal to 0 or not. Other than that, there is one more technical indicator, okay, that also help us to understand whether it will be 0 or not. Okay, and that is also going the saturated. Okay, so this is with the red candle. Now the green candle on Monday. Green candle, if there comes a green candle on Monday in the S&P 500, okay, then most likely there will be a green candle in the Dow Jones and in the Nasdaq. Okay, a green candle in the S&P 500, the Dow Jones, okay, it will not help the S&P 500 to retrace much. Rather, it will be seen as a blessing in disguise. Blessing in disguise to whom? To bears. Okay, because a green candle on Monday will simply help the S&P 500 to come out of the saturation. No more saturation, rather it will create more room for the fall to 4035. Okay, a green candle. So this is how the Monday, the closing of the Monday will be very critical. It will define what is going to happen. Okay, what is, and secondly whether there will be any kind of manipulated movement or the technical movement, a reversal or fall. Many things on Monday itself it will be clear. So most likely, okay, in my final update on Monday, okay, I will clear these terms and everything, the levels, okay, the reversal and the fall, and where we are expecting the closing. So just like on Friday I have mentioned to my Patreon committee members that looks like that the S&P 500, okay, there is heavy bearish pressure, but highly likely, most likely the S&P 500 is going to close above this particular level. Okay, so there was this the level, and S&P 500 has closed above that level. Okay, so it was expected to close as red, that was number one, that it will most likely, okay, it will close as red candle. Secondly, it will close above this level. So these two things were very much clear about the closing on Friday. So for those who want to know that how I help my Patreon community members, this is how I help my Patreon community members. I give them the movement, okay, the levels, the numbers. Okay, most of the time there comes an absolute exact hit, okay, movement. So all of these. uh, yes, so this is there now. Closing red green, okay, clear. And one more thing guys, if you want to ask anything or if you have any question, then please feel free to ask your question through the comment section. Okay, now let's discuss the another there's a scenario, another case. Okay, so that scenario is, for now we are anticipating a reversal up to 4155. Fine. What is after 4155? After 4155 there is, okay, 4190. Although there is a zone, okay, there are the two levels in the zone, but you should stick to just 4190. That's it. Okay, not more than that. So if there comes a bullish root trace, and through this the bullish root trace, S&P 500 manages to clear 4155, then it will be moving towards 4190. Okay, now only and only if the S&P 500 sustains above 4190, then only it will be further allowed to move up. But for now there are not good chances that it will be able to move towards 200-day EMA. Okay, there are some levels between 4190 and these the 200-day EMA. It will be very 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 much limited to, okay, to these levels. It will not be able to move up as such. The only and the only case, the only and the only condition the S&P 500 may get a short-term bullish reversal towards the 200-day EMA will be: number one, absolute saturation. Okay, so we will come to know about this only on Monday. Okay, as early as on Monday. Other than that, the FOMC on Wednesday. On Wednesday, okay, if the Feds go, so if the Feds decide for another pause, that is the thing. Number three, the number third, okay, this thing is the Apple. If Apple posts better than expected earnings, so if these three things happen, number one, number two, number three, in that case only we can expect a short-term bullish reversal in the S&P 500 towards 200-day exponential moving average. As simple as that. Okay, so all of these three factors are required to give that much of bullish push to the S&P 500. However, if there comes, FOMC result decision that is not supportive, Apple that is not supportive, okay, K is 0 but D is not 0, in that case no. In that case, a reversal up to 4155 or at most 4190 or below 4190, that will be there. Anything beyond this will need, some manipulated push, otherwise that is technically not possible. Okay, so and one more thing guys, remember, this is the flow of the stock market. Okay, just keep this thing in mind. This is the flow of the stock market. And if you think that there will be continuous bearish movement, no, that will not be there. Although the trend is bearish, every time there comes a confusion, the neutral, this thing, the stock market, the S&P 500 will align itself to the bearish side. Okay, but before the actual correction comes, before the actual recession comes, there will be a short-term bullish reversal, and this short-term bullish reversal will be, you can say, kind of final opportunity, final or the heavy opportunity. Okay, just like what we have seen, okay, here, a fall then heavy fall. Okay, before that, back in 2020, okay, movement and up, okay, that the bullish movement and then a heavy fall. Okay, so that will be a final opportunity to re-enter bearish. So as I mentioned earlier, that we have, recently captured 48% to 55% profits within 2 months. Okay, but now, okay, I'm also going to hold, and I will see and I will observe, okay, if there comes an opportunity. And one more thing about these, the returns that I've given, okay, recently, okay, and before that, these are the safe trades. When I say safe trades, because we trade generally in 1 year expiry or near to 1 year expiry. Okay, and the trade is, okay, very well managed through the options, okay, the calculations, and through the options analysis and through the stock market analysis overall. Okay, not just the S&P 500 but also the Dow Jones and everything, to see that what is the probability that it will remain in the bearish trend. Okay, so once it hits some critical level, then we are out. Okay, just like this one. So guys, once again, okay, if you do not want to take any risk, okay, the recession is coming, okay, and that is the best time to make a lot of money. So if you want to make the profits comfortably, okay, without doing anything, then you can participate in this program. If you trade by yourself, and you see the losses. In that case, okay, you are responsible to recover the losses, and you may or may not recover the losses. But in my case, okay, if I am giving this as surety, then this means that then I will help you recover the losses and will fully reinstate your account to its original value. So I've given the link in the description of the video and also in the comment section. Okay guys, so yes, there was this one more thing. Okay, and this thing is about the bearish movement. So as of now, the thing is that it is holding, the closing was at 4117, 4117. Okay, now if there comes a continuous fall, even though the k is equal to 0, even though the k is equal to 0, okay, and d is not 0, but if there comes a continuous fall, okay, but at the same time if d is not equal to 0, then what will happen? S&P 500 still has, you see, you must understand that S&P 500 or any index or any stock can keep coming down, can give us back to back red candles until the K and the D both becomes 0. This means that although we are anticipating a reversal, there are still very good chances, very valid chances that the S&P 500 can further come down on Monday and Tuesday. However, the movement from Wednesday onwards will be driven by the comments of the Federal Reserve Chairman and the decision of the FOMC, the Federal Open Market Committee members. Now whenever it comes down, no matter, okay, what the reason is, okay, technical, non-technical, then 4035, the zone of 4035 will be able to handle that fall. If it keeps on coming down as red, this means that no, it will find, or it will get a good or a heavy bullish reversal from the zone of 4035, because by the time it hits the 4035, the zone of 4035, it will be heavily saturated in a manner that it will be prone to give like 1%, minimum 1% or 2% or 3% bullish reversal. The only case when there will not be any good reversal from 4035 will be if there comes a bullish candle Monday, Tuesday, Wednesday, or any of the days. If there comes a bullish candle and then there comes a subsequent fall, in that case it will come down to 4035, no problem. It will hold at or around 4035. It will give some reversal, not 2, 3, 4% reversal, no, it will give some reversal, okay, that will be very limited or very much confined, okay, and then the continuation, okay, of the bearish movement, and then finally it will enter into 3xxx, okay, 3900 something. And as I mentioned earlier, that if all goes well, then we are looking for 3505 in next 1 year, not 1 year, but by the end of 2024, anytime from now to 2000, by the end of 2024, in next 14 months or 15 months, okay, if all goes well, okay, if there comes a proper recession and everything, then 3505, not just 3505, but a fall below 3505, okay. But if you think that as of now it is coming down to 3505, no, it is not coming down to 3505. For now it will come down a little, it will hold around 4000 something and 23000, and then it will get, see, it is the S&P 500 for now, okay, it is coming down fine, but before the actual correction starts, the actual recession starts, the S&P 500 will get a short-term bullish movement, only when the S&P 500 fails here or recovers, okay, this much to some level in the short-term bullish movement, then only it will start falling again, okay. So bearish movement, then the bullish movement, short-term bullish movement, and then the long-term bearish movement. This is how it will be there. A direct fall to 3505, it will not be there, means it will not be there for now, okay, in next 1 or 2 months or so, no, it will not be there. There will be many ups, downs, okay, many of these things, okay. So a tricky movement will be there, but by the end of 2024, if all goes well, I repeat, if all goes well, okay, if the Feds, if they keep the interest rates as is at these levels, economy enters into some good recession, definitely 3505 and even below 3505. So guys, hit like if you have liked this video, And if you have any question, please feel free to ask your question through the comment section. And if you want to get these the daily updates, the daily analysis from Monday through Friday, each and everything, as well as the stock market opportunities in the premium stocks, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And other than that, this my program, 30% returns in 1 year, safe trade. Okay, if you do not want to take any risk, if you want to make comfortably this money, then yes, okay, this is the only requirement. Other than that, nothing. And other than that, if you want to learn the technical movement, the technicals, the technical indicators, the strategies, the analysis, manipulation, prediction, okay, all of these things, then you can participate in my stock market knowledge transfer program. I've given the link in the description of the video and also in the comment section. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So this was my S&P 500 weekly technical analysis for the week of October 30th. That is from October 30th, which is Monday, to November 3rd, that will be Friday.